Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a bigger impulsive structure to the upside, where preferably your wave 4 is finished and we are now moving towards the upside in a wave 5. Therefore, on the lower time frame, we're looking for a 5-wave impulsive structure, preferably ending somewhere around the resistance areas I have here, 69.1k to 69.7k and around 70.9k. After that wave 5, we can label the impulse towards the upside a green wave 1 and look for a 3-wave corrective structure to the downside in a wave 2. If price can make it up to around 70.9k, the common target for your wave 2 being the 05 to the 786 will be between 62.2k and 57.2k, with the 382 at 64.2k being a less common target. After wave 2, we're looking for continuation to the upside. When we look at the end channel here, taken from the low of 2 to the low of 4 to the high of your wave 3, preferably your wave 5 is ending around the midline to the top channel area over here, and you can see that we are at the moment at the midline, but of course in an impulsive structure we want to break the high of wave 3, so preferably your wave 5 is going to end closer towards this top line, which then also is in nice confluence with some of the boxes and resistance areas that we have there. On the lower time frame, as preferably we count a finished wave 4, we're looking for price to move towards the upside impulsively. So we then have our wave 1, our wave 2, and we look for continuation to the upside in a wave 3, 4, and then a wave 5. The common target for your wave 4 is the 236 to the 0.5 Fibonacci, taken from the low to the current high on the chart, 66.7k to 65.9k. If price continues towards the upside without testing any of these fibs, or if a sideways range here is not long enough to be combined with wave 2, we just move these fibs towards the upside to higher prices if price moves up, taken by the way the fibs from the low to then wherever the high is going to be. Currently, your invalidation for an impulse is the 0.618 at 65.5k, as that invalidates a wave 4. After wave 4, we're looking for continuation up. Now, we did have the resistance area over here, which did not really act as resistance. We had a daily naked point of control, little bit of ranging, but we moved above this area. So now this area can act as support, sitting between 66.3k and 66.8k. We can then observe the reaction and preferably see some nice signs of strength. And something I like to look for is local market structure changes with some bullish CVD divergences as well. The bearish scenario on the 4-hour time frame is that you have an already finished impulsive structure to the upside in a wave 1 and look for continuation to the downside in a wave 2. Common target for your wave 2 here is between the 05786, taken from the low to the high of 1, 61k to 56.7k, uncommon target at 62.7k, which is the 0.382, and after wave 2 we then look for impulsive continuation towards the upside. That means that on the lower time frames, preferably, you're going to be counting a 3-wave corrective structure to the upside instead of an impulse, meaning an ABC zigzag, a 5-3-5-wave move towards the upside. Now you can see that price has hit the 1.618 trend-based fib extension, taken from the low to the high of A to the low of wave B. This is still a target for a wave C. It is an extension target for a wave C, but it would increase the probabilities for a wave 3, as the 1.618 is a very common target and usually a minimum target for a wave 3 in an impulsive structure, compared to a wave C, where it is more of an extension target, as the most common wave C target is between the 1 and the 1.236, but we passed it already. Nonetheless, still a target for a wave C, and we are still ranging here at the 1.618. Now, if your wave C is finished, you're then looking for impulsive continuation to the downside. So first of all, you want to lose this support area that I spoke about earlier, and you want to hit the 0.618 at 65.5k, as this would then confirm a three-wave structure to the upside and increases the probabilities for price to move towards the downside. We also have some news today at 2:30 p.m. Central European time, so make sure you trade safe around that hour, as it might increase the volatility. And if we then finally look at the probabilities, then on the 15-minute time frame, at the moment the probabilities would be higher for this to be an impulsive structure, a 5-wave move, 1, 2, 3, 4, 5, compared to an ABC, a 3-wave structure, ABC, and that is mainly because we hit the 1.618, and the 1.618 is a minimum and common target for a wave 3, and it is an extension target and a little less common for a wave C. It's just Elliott wave probabilities. Now we still want to see in an impulse to the upside a wave 4 and a wave 5. We want price to continue. We want price to continue the market structure towards the upside. It's no problem to find support here and then continue towards the upside. But we do want to also then see some bullish CVD divergences. And we do not want to hit the 0.618 taken from this low to the current high at 65.5k, as that would invalidate an impulse to the upside and increase the probabilities for a move towards the downside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.